Welcome to County Portal, your simple source for local government services and public records. Let's get started.
The Alternative Minimum Tax, or AMT, is a special tax system designed to ensure that wealthy individuals, trusts, and estates pay a minimum amount of tax, even if they have many deductions or tax credits under the regular tax system. It acts like a parallel tax calculation. You essentially calculate your taxes twice, once under the regular income tax rules and once under the AMT rules. Then, you pay the higher of the two amounts. The goal is to prevent high-income earners from using too many tax breaks to avoid paying their fair share of taxes. Here's a simplified look at how it works. First, you start with your regular taxable income. Second, you add back certain tax preference items and make specific adjustments that were allowed under regular tax rules but are not allowed or are treated differently under AMT rules. For example, state and local income taxes, often called SALT deductions, are generally not deductible for AMT purposes. Certain miscellaneous itemized deductions, like unreimbursed employee expenses, are also added back. The interest from some private activity municipal bonds, which is tax-free under regular rules, might be taxable under AMT. The exercise of incentive stock options, ISOs, can also trigger AMT because the difference between the stock's market price and your exercise price is often included in AMT income, even if you haven't sold the stock yet. Once these adjustments are made, you arrive at your alternative minimum taxable income, or AMTI. From your AMTI, you subtract an AMT exemption amount. This exemption reduces the income subject to AMT and is adjusted each year for inflation. However, this exemption amount begins to phase out for higher income levels, meaning it gets smaller as your income grows. After subtracting the exemption, the remaining amount is taxed at special AMT rates, which are typically either 26% or 28%, depending on your income level. This calculation gives you your tentative minimum tax. Finally, you compare this tentative minimum tax to your regular income tax liability. If your tentative minimum tax is higher than your regular tax, you pay the difference as AMT in addition to your regular tax. It's important to know that the Tax Cuts and Jobs Act, TCJA, of 2017 significantly reduced the number of taxpayers subject to AMT. This law dramatically increased the AMT exemption amounts and also raised the income levels at which the exemption begins to phase out. As a result, far fewer people are now impacted by the AMT, primarily very high-income individuals and those with specific types of income or deductions that are still treated differently under AMT rules. If you pay AMT in 1 year, you might be able to claim a credit for it in future years when you don't owe AMT, which can help recover some of the tax paid. Understanding AMT can be complex, and it often requires professional tax advice if you think you might be affected. Thank you for watching this breakdown of the alternative minimum tax. If you found this information helpful, please hit the like button and subscribe to our channel for more clear explanations of complex financial topics. We appreciate your support.